Good afternoon. This is the O'Hare Wealth Management Weekly Update. I'm John O'Hare. Hope you're enjoying your summer. It's already mid-July. Probably nobody will listen to this because everybody should be out enjoying the weather. With that, we're going to jump right into the questions this week. By the way, when it comes to questions, you can send them to us either at our email, which is listed on the screen here, service@o'harewealth.com, or you can text it to us. We won't get to it this time, but we will get to it next week for you. And we look forward to your questions. So, what are people thinking about this week? What's going on with the inflation number? On Tuesday, we did get the monthly CPI report, which is consumer price inflation. The number was pretty much on target. It's where we expected it. There's slight differences. Shelter went down a little faster than expected. That's good news long term. There was some weakness in autos, a little higher on energy, but that fluctuates a lot. What was wrong with the number? Yeah, it's still not low enough for the Federal Reserve to start lowering interest rates. If anything, the number is stubbornly coming down as we expected. And I don't think this will change the Fed's outlook for possibly one or two interest rate cuts this year. If anything, paying attention to the yield curve, as we call it, or that just means shorter rates versus longer rates. Longer rates are higher, shorter rates are lower. Longer rates have gone up a tad here in the last few weeks, which is usually an indication of a stronger than expected economy. And a recent Wall Street Journal article on Monday commented that survey by them of economists throughout the country showed a significant reduction in the expectation for a recession this year. Remember, 3 months ago, almost half of the economists and strategists thought we'd have a recession. That's down to about a third now. So, some of the disruption from the tariffs, we're getting a handle on it. We're starting to feel how it works, and there seems to be less concern about a drastic hit to the economy. So that's good news. We also have had some comments regarding geopolitics. And again, tariffs are working their way through the system, not seeing a lot of impact on inflation yet. And that's good news, but it doesn't mean it's not coming. Another factor that could be an issue coming here is just recently this week, the President Donald Trump, has talked about ending the Russian Ukraine war. And something I saw just this morning in the Wall Street, he's giving the Russians, or Putin, 50 days to get this war complete. If not, he's going to consider significant disruptions and, excuse me, sanctions against Russia. That could include putting tariffs on countries that import Russian oil. Short term, this is probably bad for inflation because short term oil might spike, but this is clearly not a long term thing. Actually, if it's successful, it'll most likely bring oil prices down over time because right now Russia is constricted in who they can sell oil to. If the war ends, they can sell oil to anybody. Anybody can buy it. That would probably drive the prices down slightly from here. So look for a possible jump in that. Otherwise, we're pretty comfortable with the inflation number we saw. We're going to end this week with talking about our book. Little update here. This is the one we recommended in July and August. It's called Breaking the Age Code by Becca Levy. I finished this book about a month and a half ago. Very interesting. Obviously, if you're an older adult like myself, I found it very fascinating. Two big things come out of this book that you should take away. One is the way you think matters. And she has some very good evidence here that if you are negative about aging, it probably will have an impact on your health and your lifespan. The book proclaims that you could live as much as 7 or more years longer if you have a positive attitude towards aging. Now, part of that could go with if you're positive about it, you take care of yourself better. But her data was very, very interesting and I think uplifting for most people. If you could add 7 years to your life, I think you'd want to do it. Some of the studies I've seen, I think if you give up smoking, it only adds 3 to 5 years to your life. So her ideas in here are probably very helpful. The other big theme in here, which I knew was out there but didn't recognize how much it's out there, is just the negative attitude of especially the US towards aging and how early it begins in life. Very early in school days, we tend to see children have a negative attitude towards older people. And that goes on for the rest of our life and carries through. It's an age bias. She refers to it as ageism. And she makes a strong case that we shouldn't put everybody in the same basket. Not everyone who's aging gets dementia. Not everyone has physical problems. They don't forget everything. They don't have trouble learning. They can learn new things. She does a good point or a good job of pointing out that we should basically nip this in the bud and start working with all age groups to consider respecting people's age and understanding a lot of the stereotypes, like any group we stereotype, is just not true. Good book, easy read, a lot of fun. I think you'll enjoy it. That is all we have for today, and we will see you in another week. And again, enjoy your summer.